Prismatics Financial Institute.
So the first trend that we see is that more and more countries and companies are committing to reach net zero emissions. And typically that's around 2050 and sometimes before. And that's because they're recognising the risks that Maxine outlined. They see the urgency required to limit emissions so that we can limit global temperature increases to ideally 1.5 degrees C centigrade or below. And they are concerned about tipping points in the climate system. So, recognising that we may suddenly reach and breach some of these tipping points, then you can get an acceleration in the intensification of the physical risks associated with climate change. And as Maxine said, if we don't act now, then those risks are just building up in the system. So there are a number of commitments, and no doubt many of you will be seeing them in the news. And there's a little bit of a virtuous circle here, because if your competitors commit, then you risk looking like a bit of a laggard, a bit slow, if you like, if you don't also commit. And if countries commit, if the countries that you're operating have committed, then you can be pretty sure that the policy environment in which you are operating will also change as well. With all of those changes comes risks and opportunities which risk professionals will need to navigate. The second trend we would highlight is just the enormous increase in regulatory focus. And here is somewhat of a partial timeline. We couldn't possibly put everything in here, but we just picked out a few highlights that we thought were very pertinent. And one of the early days, back in 2015, I think it was, France mandated climate disclosures with their Article 173. And then you found, then after that, you found that China added green finance to the G20 agenda. And from those early days, we've seen a real just flourishing of activity. Of course, we had the Paris Agreement. The task force on financial related disclosures was a very important milestone, and that gave impetus across the real and the financial economies, real and financial firms, to really start thinking about their disclosures. And we'll come back to the framework that they use in a little bit. The network for greening the financial system is also a very important network, in our opinion. This was created in 2017. It's not a standard-setting body, it's a coalition of the willing. That's how they describe themselves, of central banks and regulators. And Mexico was a founding member of that coalition. I think it started with 8 founding members, and now it's reached over 90. And the way that operates is that central banks and regulators are sharing best practice, they're sharing learnings. So what you see in the regulatory community is that if one of the regulators comes out with expectations, then the others will look at that and they may well follow suit. And they've done an enormous amount of activity, particularly on things like risk management, on scenario analysis, on data, but also things like central bank portfolios, monetary policy. So it's a very broad range it was a wealth of material for you to look at. In terms of formal regulatory expectations, supervisory expectations, that is, I think the PRA in the UK, the Prudential Regulation Authority, was the first regulator to set formal expectations for banks and for insurance companies. And there's a link in the slide there. And then we were thinking, well, who else would be put in there? But there's a huge range of activity going on. And the sorts of things that regulators are looking for is good governance around this and accountability for climate-related risks within firms. Sometimes it's not just climate-related risks, though. It's broader environmental risks, and you see that in some of the supervisors, like the ECB, the Monetary Authority of Singapore, for example. They are specifically broader in what they're looking for. Regulators will want to see whether you are embedding it within your risk management, your day-to-day risk management, and there you might be asked, what metrics are you using? Have you set targets or limits? And are you using tools like scenario analysis? As Maxine was talking about, many of these risks are going to play out over the future, and scenario analysis is the key tool really to be able to understand that range of uncertainty. We were looking at the current membership of the NGFS, and a number of countries beyond Mexico are now members. So you've got Colombia, Chile, Costa Rica, I've probably forgotten, and of course Mexico as well. So a number of the local central banks or regulators have signed up already, in which case they will be part of those conversations, and you can probably bet that regulations and scrutiny will be coming your way. The third trend I wanted to pick out was just the increasing complexity of the climate landscape. This chart, or this PowerPoint slide, just gives you really a handful of the organisations that we see doing very good work. There's plenty more, but there are organisations that are industry-led, some are investor-led, some are providing analytical tools, some provide insights on current practices, risk education. There are standard setters, there are principle setters, and this is by no means a complete set. Now, not everybody in the audience needs to understand every single one of these organisations, but if you've got no idea who these bodies are, then you're missing something. You're missing a very important set of players in the market, and they offer the opportunity to improve the sustainability of your organisations, to manage the risks better, and meet the increasing expectations of investors, regulators, and consumers. So probably a little bit of homework for some of you there, thinking, I don't know all of those players. The fourth trend I'd pick out is the increasing number of climate laws and policies. And this is a little bit out of date, I'm afraid, but it was an attractive chart just to illustrate the point. We're expecting this tide to increase as well. These laws are going to affect financial firms and non-financial firms. So they're either going to affect you directly, or they're going to affect the firms that you're investing in or underwriting or lending to. So that whole legal context is an extremely important one for you that you will need to be looking at in terms of the risks. And the final trend we'd pick out, this chart is taken from our second annual climate risk survey. We're just in the, Maxine and I are just in the middle of doing the analysis on the third one. But we ask firms, this is for financial firms, how do you manage your climate risk staffing and your processes, and all sorts of different questions actually. But what we find is that across financial firms, at least, it's the risk teams that most commonly manage climate risk within those firms. In the majority of firms, climate risk is being incorporated into existing teams. It's not a standalone team. So it's some sort of dedicated team. And you see there are two big bars, if you like. There's the second one down, which are the other risk functional teams. And in the bottom there, you've got multiple teams. So what we're seeing is firms thinking, well, climate risk is going to affect credit risk, operational risk, maybe legal risk, reputational risk, and those teams need to embed it within their processes. So that's a very common thing that we're seeing. I think I'd also add a further trend probably and it links to the scenarios actually, and the net zero emissions targets in particular. But firms are increasingly interested in aligning their portfolios to a particular emissions pathway. So, for example, they may say, right, this portfolio is aligned to a 2-degree scenario. So that's where firms are thinking not just about the impact of climate risk on their balance sheet or on their portfolios, but it's also thinking about the impact of those portfolios on the climate, which is one of those two perspectives that Maxine was talking about earlier on. So I think that probably outlines the key trends that we're seeing. I'm sure there are many others, but for risk professionals, they're the ones that we would highlight as being particularly important. And now I'm going to turn back to Maxine to talk about
Prismatics Financial Institute.